What if every business contract in the world could execute itself automatically, without lawyers, without banks, without any middleman, and without the possibility of anyone cheating or breaking the agreement? What if payment was released the exact moment a delivery was confirmed? What if insurance claims were settled instantly when a flight was delayed? What if royalties were paid to artists automatically every single time their music was played? This is not a future vision, this is happening right now in 2026 through a technology called smart contracts. Aave V3 alone holds $14.49 billion in total value locked across all chains as of May 2026, processing lending and borrowing without a single loan officer involved. Uniswap V4 pushed approximately $22 billion in 30-day DX volume as of May 2026, executing millions of token swaps without any exchange operator or broker. The global blockchain market continues to grow steeply as more industries adopt automated on-chain logic. In this video I am going to explain exactly what smart contracts are, how they work, the 6 most important business applications transforming industries right now, the biggest real-world examples with live data, and what the future looks like for businesses that adopt this technology. Let's get into it. Before we get into the business applications, let me explain what a smart contract actually is, because understanding the technology is the key to everything. A smart contract is a small program stored on a blockchain that runs automatically when its inputs match the rules it was written with. Think of it like this. Imagine a traditional business contract between 2 companies. In a traditional contract, 2 parties write down the terms, they sign the document, and then they hope that both sides follow through. If one party does not, the other has to hire lawyers, go to court, and spend months or years trying to enforce the agreement. A smart contract eliminates all of this. Instead of writing terms on paper, the terms are written in computer code and deployed on a blockchain. The code runs exactly the same for every user every time without any manual approvals. When the conditions are met, the contract executes automatically. The payment is released, the asset is transferred, the record is updated, with no human intervention required. Smart contracts have 4 defining characteristics that make them revolutionary for business. First, they are self-executing. The contract runs automatically when conditions are met. Second, they are trustless. You do not need to trust the other party because the code enforces the agreement. Third, they are transparent. Anyone can verify the rules and the execution on the blockchain. Fourth, they are immutable. Once deployed, the code cannot be altered or deleted. This combination of automation, trustlessness, transparency, and immutability is what makes smart contracts one of the most powerful business tools ever created. Now let's talk about the first and most important business application of smart contracts, which is decentralized finance. DeFi smart contracts have completely replaced the traditional banking intermediary model for a growing range of financial services. Here is how they work in practice. In traditional lending, if you want to borrow money, you go to a bank, fill out an application, submit financial documents, wait for approval, and pay whatever interest rate the bank decides to charge. The entire process can take weeks and involves multiple human decision makers, each adding cost and delay. With DeFi smart contracts, you connect your cryptocurrency wallet to a lending protocol, deposit your collateral, and the smart contract instantly calculates your maximum borrowing capacity, sets the interest rate based on real-time utilization of the lending pool, and releases the loan to you. The entire process happens in seconds with no application form, no credit check, and no loan officer. Aave V3 is the perfect real-world example. As of May 2026, Aave V3 holds $14.49 billion in total value locked across all chains, with V3 alone accounting for 96.6% of that total. When you deposit ETH or a stablecoin into Aave and borrow against it every block, the smart contract recomputes the interest rate from utilization automatically. No human is involved at any point. Another powerful example is Uniswap V4, which held $699.74 million in TVL and pushed approximately $22 billion in 30-day DX volume as of May 2026. Uniswap uses a constant product math formula to price every token swap and settles trades automatically in ETH and stablecoins with no order book and no exchange operator. The V4 release added hooks allowing other contracts to extend the pool logic without forking it, which has become the new pattern for specialized trading strategies. The second major business application is supply chain management, and this is where smart contracts are creating enormous efficiency gains for the physical world. Global supply chains involve dozens of intermediaries, manual paperwork, opaque handoffs, and fragile trust assumptions. Each step introduces delays, costs, and opportunities for fraud. Smart contracts replace all of these fragile trust assumptions with executable code. Here is a specific example. Imagine a pharmaceutical shipment. Traveling from a manufacturer in Germany to a hospital in the United States, traditionally tracking this shipment involves paper documents, multiple verification steps, and significant risk of tampering or fraud. With smart contracts, the shipment is locked to GPS coordinates on the blockchain. The smart contract monitors temperature sensors throughout the journey to ensure the medication stays within the required temperature range. Payment is released automatically only when the carrier delivers the shipment to the correct location and the temperature record confirms it stayed within safe parameters throughout transit. If the temperature exceeded safe levels at any point, the smart contract automatically flags the shipment and withholds payment. No dispute, no lawyers, no delays. The code enforces the rules automatically. Major corporations including Walmart, Maersk, and IBM have been developing blockchain supply chain solutions. Walmart's food safety blockchain solution traces the origin of food items in seconds rather than the days or weeks required by traditional paper-based systems. Smart contracts automate payment releases upon verified delivery, record tamper-proof provenance data, and trigger condition-based actions when sensors detect breaches, reducing fraud and accelerating audits across complex logistics networks. The third major application is real estate and property transactions, and we explored this in detail in our cryptocurrency and real estate video, but smart contracts deserve specific attention here because they are the core technology making real estate tokenization possible. In traditional real estate, a property transaction involves real estate agents, lawyers, title companies, mortgage banks, government registries, and countless manual processes. A typical transaction takes 30 to 90 days to complete and involves significant fees at every step. Smart contracts automate the entire process. Here is how a tokenized property transaction works in 2026. The property is legally documented and its ownership is represented by digital tokens on the blockchain. When a buyer and seller agree on a price, the smart contract holds the purchase funds in escrow automatically. The contract automatically verifies that the buyer has sufficient funds and that the seller has clear title to the property. Upon verification, the contract simultaneously transfers the property tokens to the buyer and releases the funds to the seller. The entire transaction is recorded permanently on the blockchain as the new ownership record. The process that took 30 to 90 days in traditional real estate now settles in minutes on the blockchain. Smart contracts also handle rental income distribution automatically. In a tokenized property with 10 million tokens outstanding, the smart contract receives monthly rental income and distributes the proportional share to every single token holder simultaneously and automatically. This is a task that would require an entire accounting department in traditional property management, but is handled by a few lines of code in a smart contract. The fourth major application is insurance and claims processing, and this is one of the most compelling use cases because insurance is an industry notorious for delays, disputes, and high administrative costs. In traditional insurance, if your flight is cancelled, you need to file a claim, submit documentation, wait for the insurer to review it, and potentially wait weeks for reimbursement. The insurer employs large teams of claims adjusters, fraud investigators, and administrative staff, all of whom add cost that ultimately comes back to you as the customer in the form of higher premiums. Smart contract-based insurance called Parametric insurance changes this completely. Here is how it works. You buy a flight delay insurance smart contract. The contract is connected to real-time flight data through what are called oracles, which are trusted data feeds that bring real-world information onto the blockchain. If your flight is delayed by more than a specified threshold, for example 2 hours, the oracle reports the delay to the smart contract. The smart contract automatically verifies the delay, confirms you are the policyholder, and immediately releases the insurance payment to your wallet. The entire claim settlement process is automated and instant. No paperwork, no phone calls, no waiting. Ethereum is one of the leading platforms building parametric insurance products on blockchain in 2026, including flight delay insurance, crop insurance for farmers in developing countries, and hurricane protection products. Smart contracts in insurance eliminate the disputes that plague the traditional industry because the rules are written in code, visible to all parties, and enforced automatically when conditions are met. The fifth major application is intellectual property and royalty payments, and this is an area where smart contracts are solving one of the oldest and most persistent problems in the creative economy. when a musician releases a song on a traditional streaming platform, the path from a listener pressing play to the artist receiving payment involves record labels, streaming platforms, collection societies, distributors, and multiple layers of administrative processing. It can take 6 to 12 months for royalty payments to reach creators, and the lack of transparency means artists often have no way to verify whether they are receiving the correct amount. Smart contracts create a direct and transparent connection between usage and payment. Here is how it works in practice. An artist deploys a smart contract that represents their music rights on a blockchain. The contract defines the royalty percentage owed for each play, each download, or each license. Every time the song is used, a transaction is triggered. The smart contract automatically calculates the royalty owed and distributes it directly to the artist's wallet. The payment is instant, transparent, and verifiable. NFTs or non-fungible tokens have taken this a step further. When an artist mints their music as an NFT, the smart contract can include a royalty clause that ensures the artist receives a percentage of every secondary market sale automatically and in perpetuity. This means if a collector buys an artist's NFT for $1 and later sells it for $10, the artist automatically receives their royalty percentage from that secondary sale forever. This has never been possible with traditional copyright mechanisms. The sixth major application is digital identity and credentials verification, and this is a use case that affects every single person on the planet. In the current system, verifying your identity or your credentials requires contacting the issuing institution, waiting for them to respond, and trusting that their records are accurate and up to date. When you apply for a job, your employer contacts your university to verify your degree. When you apply for a visa, immigration authorities contact multiple government databases. When you open a bank account, the bank runs a KYC check against multiple identity databases. Each of these verification processes is slow, expensive, and creates privacy risks because your personal data is shared with multiple parties. Smart contracts enable a different model called self-sovereign identity. Here is how it works. Your university issues your degree as a cryptographic credential anchored to the blockchain through a smart contract. When an employer wants to verify your degree, you share a cryptographic proof with them. The employer's system queries the smart contract on the blockchain. The contract confirms the credential is valid without revealing any additional personal information. The verification happens instantly, for free, without anyone contacting the university, and crucially, your personal data never leaves your control. NIST, the U.S. National Institute of Standards and Technology, notes that smart contracts are particularly useful in multi-party business processes because they can provide attestable data and reduce reconciliation overhead. In 2026, governments, universities, healthcare providers, and financial institutions are all actively exploring smart contract-based identity and credential systems as the digital economy demands more efficient and privacy-preserving verification. So let's bring this all together with everything you need to know about how smart contracts are revolutionizing business in 2026. A smart contract is a self-executing program stored on a blockchain that runs automatically when its predefined conditions are met. It is trustless, transparent, immutable, and eliminates the need for intermediaries in any agreement. The 6 major business applications transforming industries right now are: first, decentralized finance, where Aave V3 holds $14.49 billion in TVL and Uniswap V4 processes $22 billion in monthly volume with no human intermediaries involved. Second, supply chain management, where smart contracts automate payment releases, track provenance, and enforce conditions across global logistics networks for companies like Walmart and Maersk. Third, real estate and property transactions, where smart contracts settle ownership transfers in minutes instead of 30 to 90 days and automatically distribute rental income to fractional property owners. Fourth, insurance and claims processing, where Parametric insurance smart contracts pay claims instantly when conditions like flight delays are confirmed by trusted data oracles. Fifth, intellectual property and royalty payments, where smart contracts pay artists directly and instantly, and NFT royalty clauses ensure creators earn from every secondary sale forever. Sixth, digital identity and credentials, where smart contract-based verifiable credentials allow instant privacy-preserving verification without sharing personal data. The businesses that understand and adopt smart contract technology now are building efficiency, trust, and competitive advantages that will compound over the coming years. The future of business is automated, transparent, and trustless. If this video helped you understand smart contracts, please hit the like button and subscribe to the Crypto Skill for more education like this. Drop a comment below and tell me, which of these 6 applications do you think will have the biggest impact on your life?